Hey everyone, welcome back to Corporate Decoder, the place where we, decode what companies are really saying when they talk to the big boys on Wall Street today. We're diving into Tokyo Lifestyle Co. Ltd's latest filing, and let me tell you, it has got more twists than a ramen noodle. So, what is the big news, Tokyo Lifestyle? Which used to be known as Yoshitsu Co. Ltd, is giving us a peek at their financial health for the first 6 months of their fiscal year, ending the 30th of September 2025. This isn't their full yearly report, but a mid-year check-in, and it's being folded into their bigger registration statements, which means they're updating their public record with this crucial data. Think of it like a progress report for investors. Now, before we get too deep into the numbers, let's remember who we're talking about. Tokyo Lifestyle is in the business of, you guessed it, lifestyle products, and they're based in Japan. They file these reports with the US Securities and Exchange Commission, or SEC, because they have a presence in the US market. They make it clear they file under the Form 20-PEG, which is the standard for foreign companies reporting to the SEC, not the Form 40-F, which is for Canadian companies. This tells us they are a foreign private issuer. The real meat and potatoes of this filing is, of course, their financial statements. What we're looking at here are the unaudited consolidated financial statements for the 6 months ending the 30th of September 2025 compared to the same period in 2024. Unaudited means they haven't gone through the full deep dive audit by external accountants yet, but it still gives us a very good picture of their performance. Let's hone in on some of the key figures that tell the story. When we look at their revenue, the first thing we want to see is growth. Did they sell more stuff? Did their sales go up from last year to this year? This filing gives us that snapshot. Looking at their statements of operations, we can see how their sales translated into profit. For instance, we're comparing the 6 months ended the 30th of September 2025 with the prior year. A healthy business typically shows an increase in revenue, and then we want to see if that revenue increase led to more profit. It is not just about selling more, it is about keeping more of the money they earn. Following revenue, the next big question is about operating income. This figure shows us how profitable the company's core business operations are before accounting for things like interest expenses or taxes. If operating income is growing, it is a strong sign that the underlying business is performing well. A decline here, even if revenue is up, can signal that costs are rising faster than sales, which is a red flag for future profitability. And finally, the bottom line, net income. This is what is left after all expenses, interest, and taxes are paid. This is the profit that belongs to the company's shareholders. Are they making more money than before? Is this profit growing steadily for any investor? This is the ultimate metric. A growing net income suggests the company is managing its finances effectively and creating value for its owners. It is also important to note why this report is being filed. The document explains that Tokyo Lifestyle Company Limited is providing these 6-month financial statements, and in doing so, they are incorporating this information into their existing US registration statements. This is a way to keep their public filings current and ensure that investors have access to the latest financial information. They are essentially saying, here is our latest financial update, and it is now part of the official record that investors rely on. Alongside the financial statements, they've also included a press release. This is the company's official communication about these results to the public. Usually, press releases highlight the positive aspects of the financial performance, so it is wise to read them in conjunction with the detailed financial tables to get a balanced view. This specific press release is titled Tokyo Lifestyle Company Limited reports first 6 months of fiscal year 2026 financial results, giving us a clear indication of its content. The report is signed off by Meiken Ayama, who holds a key position as representative director and director, also acting as principal executive officer. This tells us who is ultimately responsible for the accuracy and content of this filing, adding a layer of accountability to the reported information. Now, looking at these results in the broader context, Tokyo Lifestyle appears to be in a period of transition. The former name change from Yoshitsu Co. Ltd. to Tokyo Lifestyle Co. Ltd. already signals a strategic shift or rebranding effort. We need to see if the financials reflect a strengthening of their core business under the new identity. The inclusion of detailed financial statements indicates a commitment to transparency for their US-listed securities. However, it is crucial to remember that these are unaudited statements. While they provide a good indication, a full audit might reveal nuances or adjustments. It's essential to track their performance over the next few reporting periods to see if these trends are sustainable. Are they consistently growing revenue and profit? Are their operating costs under control? These are the questions that a seasoned investor would ask. From what we can see in this interim report, the story of Tokyo Lifestyle Co. Limited for the first half of their fiscal year 2025 is one of ongoing reporting and financial disclosure. The lack of specific numerical data in the provided HTML means we can't dive into specific revenue or profit figures here, but we understand the purpose of this filing to update the market with their interim financial performance and incorporate it into their existing public registration. The true test will be in the subsequent audited reports and the company's ability to translate their lifestyle brand into consistently growing financial results. Alright, that is our Decoder on Tokyo Lifestyle's latest filing. What is your take on these disclosures and what they might signal for the company's future direction? Drop your thoughts in the comments below. If this breakdown was valuable, hitting that like button really helps us out, and be sure to subscribe for more deep dives into corporate filings. And hey, don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next Decode.